You're led to believe that countries in the EU are completely unified in their stance to Bitcoin and cryptocurrency. And you're also led to believe that that stance is genuinely negative. But we've had two stories this week that directly contradict that narrative. Welcome to 1% BTC. I'm Dominic and this is David. And today we're looking into Europe. Quick disclaimer, nothing we're about to say should be considered financial, investment, tax, or legal advice. We are just two guys on the internet. All investing is risky, and Bitcoin and digital assets are particularly risky at the best of times. We try to provide a balanced view, but some of our models can be wrong or outdated at times. Hashtag do your own research.
And just a reminder to please like and subscribe our videos. It genuinely helps us understand what topics you want more of, and it pushes this content to the people who actually need it, right? We really appreciate you being part of this movement.
Absolutely. Thanks, guys. So today we're going to break through the narrative and give you the reality, the facts, the figures. So the first story of the day, France's second largest banking group, BPCE, will begin offering in-app crypto trading to 2 million retail customers, expanding to 12 million by 2026, enabling purchases of Bitcoin, Ethereum, Sol, and USDC through regulated digital asset accounts managed by their subsidiary, Hexarch, marking one of the largest traditional bank crypto rollouts in Europe to date. Now, the great news is the manipulation level in these general articles, if you read them, is low. The reporting is descriptive, measured, and infrastructure focused. It frames European banking as embracing mainstream crypto adoption, moving from wait to see to full integration, and presents crypto as normal financial product within trusted retail banks. It suggests an acceleration of MiCA-aligned institutional adoption in Europe. So MiCA is their regulatory framework for digital assets. And obviously the emotions, if you were to read this, and especially if you're European, and especially if you're French, would be confidence in Bitcoin and cryptocurrencies. You'd assume they're becoming normalized. And also there is a slight bit of aspirational, however, in this article that the tool has picked up. And that is the idea that obviously, although the claim that they're expanding from 2 million to 12 million customers is true, it's obviously still a massive reach. It's still going to take a lot of work to get there. So what are the actual facts? As I said, the tool has confirmed that the rollout has been confirmed, it's scheduled, and it's backed by BPCE's licensed crypto subsidiary. And it's also, most importantly, aligned with MiCA. BPCE is France's second largest banking group with over 9,000 branches and 12 million retail customers. The phase one rollout, as I said, will cover 2 million users with full 12 million expansion in 2026. So all of that is absolutely true. The first 4 regional banks begin rollout in the next couple of months, and it will be a paid subscription model. So €2.99 per month, plus 1.5% trading fee, which suggests strong consumer demand expectation. So just reading this before we jump into other things, the thing that strikes me is that that is pretty competitive. You really wouldn't offer those type of fees unless you're expecting a big uptake, which I think is one of the reasons why BPCE has made this move and jumped into it. But essentially, one of the largest potential retail funnels in Europe has just been opened. So, David, where are you thinking this is going to score? I'm going to give you a range. Above 5, below 5 as a start. What do you think?
Well, France is at the center of Europe, right? In terms of it's very traditional historically, and I think this is quite bullish because especially banks, what they do is they do mainly 2 things. They follow the profit and they follow the demand. And traditionally, crypto has not been part of this, right? But now it is. And so they're leading the way, and you're going to see other banks, the largest banks follow. So I would actually put this at a 3. Yeah, a 3. 2 or 3. That's my rating.
Well, you're being a bit bearish with this. You gave us all the facts as to why. Like, you even mentioned the spread, like how you think it might spread to other places in Europe. But yeah, it came out as a 4.85. It came, or 4.8, I should say, came out as really, really strong. So the narrative obviously being that major European banks are normalizing crypto trading, but the reality is that it's all to do with the number. It's to do with two things. It's to do with the numbers, and it's to do with the in-app purchases, the actual trading function coming from the bank itself, rather than the bank just saying, hey, we're not going to block you if you start to use crypto trading services. Very big difference. So them giving crypto access to 2 million French customers is a big deal, because it represents one of Europe's largest banking groups, directly exposing its retail user base to digital assets. While it isn't US scale and doesn't focus solely on Bitcoin, the impact comes from distribution. Millions of everyday users can now buy crypto inside of their banking app they already trust, without needing Binance, Coinbase, or external exchanges. This reduces friction massively. So imagine when you log onto your bank, there's just an area there where it's like, hey, you can actually trade. You can buy stocks and shares. You can now do exactly the same thing with crypto. I guarantee you there are many, I'd put it in the millions of retail investors, and specifically within this spec, I would definitely put it in the tens of thousands at a minimum, who would gain confidence and probably start doing it just because it's in there and they've got easy access, easy to transfer your funds, very low friction. So instead of onboarding to a separate platform, having to learn things like private keys, transferring funds, users can start investing with a couple of clicks. So BPCE, being the second largest retail banking group in France, is completely a massive deal. It is a significant milestone. The only thing that stops it from being higher in this case is the fact that it's just nothing compared to the size of the US banks. The large US banks have just far more reach, and a lot of even though this may be bigger than a number of smaller US banks, it would other European countries, competitors in China, etc., they don't tend to watch these banks. They'll be watching what the big players in the US do. So it's big from a European perspective, and big as that first mover effect that you alluded to, but not the scale that we've seen with sort of the Bank of America news that we saw last week and things like that.
Interesting. Well, that surprises me. It's really good that it's bullish, but also it's more bullish than I thought it was going to be. One negative that I'd like to highlight is that just as it relates to our channel, it's similar to how the Bitcoin spot ETF was very bullish, and it helped to increase adoption amongst kind of retail investors and institutional investors, but it still is not. It's good for adoption, but it's a bit bearish for sovereignty, right? So
absolutely,
it still puts the ownership of your Bitcoin in the hands of the banks.
The bank, yeah. And the other thing to bear in mind, the reason that this didn't score high, which I should have alluded to, is that obviously it's not just Bitcoin centric. They're allowing it for all cryptos, which obviously dilutes the Bitcoin message. And obviously, any time that you get a bank doing this, it can be politicized. Obviously, depending on which government it happens under, the opposing government can claim that the government in power is now pro Bitcoin and or pro crypto and enabling XYZ and all this FUD and rumors. So these things can get politicized, which is why right now it's not at a 6.4, it's at 4.8. And obviously, if the uptake is large amongst their 12 million, once they've rolled out to the full 12 million, yeah, then we should start to keep this up to a 6.4. So to be clear, this story will matter in 5 years. This is another one that we will be tracking and that we recommend that you watch as well.
Excellent. This is similar to, JP Morgan, where they're, these big banks, typically they say, no, we're not going to touch the asset class. We're not going to recommend it to our clients and everything, but they have to listen to what their clients are demanding. And my kind of assumption is their clients are saying, why aren't you offering this? We're going to defect to other banks if you don't offer this to us within your kind of umbrella of offerings.
Absolutely. Now, really complex piece of news actually, because this is actually one that took quite a bit of work by the tool to actually try and rank down to how it was going to file it. But essentially, the reporting on this has been completely mixed, mainly because it's so politicized. But essentially, Poland's president has vetoed a major crypto asset regulatory bill intended to bring the country into alignment with the EU's MiCA framework. So the veto triggered intense political backlash, strong support from crypto-friendly opposition figures who saw it as very pro-Bitcoin, but industry warnings about companies leaving Poland as a result, and debates over obviously consumer protections, foreign interference, and market stability. So in terms of the framing, as I said, the manipulation level, no matter which way you look at it, because you will see, even though the article that we've pulled out on here is specifically about, we've tried to make it find one that was as neutral as possible. Generally, no matter if you see articles in terms of support, which generally seem to be coming out of Poland, especially the party that's in power, or from the European side, which is obviously condemning the move, it's always dramatic framing. From the pro-crypto side, you're hearing calls of freedom, protect the Poles, and destroying the industry, as in the MiCA bill. And from the anti-veto side, you're hearing the word that it's Russian interference, that Putin is rubbing his hands, that he's pulling, once again, moves like this move European countries like Poland away from the EU and causes dissent amongst them. So the fact that they're moving against MiCA and he's actually vetoed it at the presidential level is a real big thing. Also worth pointing out here that they did try and overturn his veto up until today, and it wasn't successful. So the veto still holds. Now, obviously, anytime here, from one side, it's being framed as fear, fraud, interference, foreign interference, chaos. From the pro-crypto side, you're hearing optimism. Yes, we've got someone in power that's going to really stand up and actually go for something which is going to be really pro-crypto and really pro-business. And then from the other side, all across, you've basically got political anger on both sides. It's basically national pride versus EU pressure, and Bitcoin and crypto have become one of the choke points for that. So this is going to be a really complex one. So what are the actual facts? He did veto the crypto assets regulation bill, and the veto power is constitutionally legitimate. As I said, they did try and overturn it. They were unsuccessful. Now, the bill was designed to align Poland with the EU MiCA rules, including oversight by the Financial Supervision Authority. Now, without implementation, however, Poland cannot designate its supervisory authority by the EU deadline of July 2026. Now, the failure to comply with MiCA would prevent crypto firms from registering in Poland, pushing them towards other EU jurisdictions. Keywords there, potentially. Yeah. So Poland, you may think, why worry about Poland? But 18% of Poles have invested in crypto, and 20% of those report fraud or abuse experiences. So it's a really mixed bag. So you've got, what's that, around 3 to 4% of the population that have been affected by some levels of fraud, meaning that MiCA is a regulation like MiCA is definitely needed. However, you've also got a large majority of the population who are very, very pro-crypto, and they see MiCA as too constraining and too restrictive. They want to be, I would suppose, a country more like akin to sort of a Singapore or Dubai in terms of the way that they operate. I know Dubai is not a country, but you get the idea. But the political split basically indicates a deep structural disagreement over Poland's crypto future, regulatory framework, and EU alignment. So, with all that said, it's a bit of a tough one, David, but where do you think this would sit overall, given everything you've heard? Obviously, the veto itself could be argued is very, very positive, very pro-Bitcoin. We're going to forge our own future. We're not going to be hamstrung by European rules. Yeah, we're going to make sure that we can actually set the rules that really bring in the business, that make us sort of more like America. We encourage it. But at the same time, markets hate uncertainty. this lack of alignment is a real big problem. So where are you leaning, positive or negative? I won't get you to make a score. I'm just going to get you to guess positive or negative from a tool perspective.
I'm going to say negative, just because this is an example where Poland is politicizing crypto regulation, and I think that's kind of negative. But and they're considered like an outlier in Europe, right? So they're one of the smaller European and kind of less influential European countries. But on the positive side, it's very much, they're bringing it to people's attention. They're saying, you know what, this is important. And in a regulatory kind of context, we need to protect our economy, our people, our investors, and we need to support them with the greatest opportunities in the form of crypto, right? So that's why it's not so negative, but I'm still saying well, I know you told me not to give a score.
What score are you going for?
I'm going to go for -1.
-1.
Yeah.
So it's a -3 overall. Yeah.
Wow.
Now, believe it or not, I actually thought this was going to come out the other way before I ran the score and ran all the information through the engine and got it to do the live checks. I expected this to be positive because I thought the veto and the pro-crypto stance, I thought other countries may follow. The tool basically shot it down and said, no, we haven't heard any indications that other countries are considering that. For all of its problems, the MiCA bill obviously does ensure alignment. And anytime you get lack of alignment amongst those countries, it does cause problems, real tangible problems. So you were right to be negative. Now, a -3 is meaningful, but obviously you were right that the size of the country does impact the score. And Poland just isn't a major player, despite the fact that they've got 20% roughly of their population who own digital assets. Now, if you think about it, here's the way to summarize it. So Poland vetoing the EU's crypto assets regulation sounds dramatic because obviously the narrative sounds really bad, but the real impact is more about bureaucratic friction, which is what you alluded to, David. It's not really about Bitcoin being restricted or expanded or crypto being restricted or expanded. The veto doesn't stop Europeans or Poles from buying Bitcoin. It doesn't shut down exchanges, and it doesn't change consumer access. What it does do is delay the EU's attempt to create a harmonized regulatory framework. And when rules are delayed, large institutions, the big players, the ones that you actually want to get involved in Bitcoin, typically delay their own plans too. That's the negative effect. Uncertainty, banks, brokers, and pension funds prefer clarity. Even if the rules are strict, they know how to operate within the game. Uncertainty, however, freezes product development. So in the same way you commented earlier about like BCPE having the first mover effect in Europe, well, yeah, this kind of takes it off the table for any Polish banks that want to follow on. So the veto slows down Europe's regulatory momentum, but it does not reverse it. So it's not fully negative. So compared to institutional execution stories like we saw with BlackRock, this is far less important because it produces no actual impact to Bitcoin flows. In simple terms, the veto, the way I would think of it, is it's like a speed bump, not a wall. It slows institutional adoption in Europe temporarily, but it doesn't meaningfully change Bitcoin's long-term trajectory. However, this will stay a -3. Potentially, if it continues post that deadline in July, it will get as bad as a -4.4. Then we'll see what happens then. But right now it remains negative.
That's a great analogy, a speed bump, because you know, as you say, markets don't like uncertainty. When there's no accord, there's no kind of consistent agreement across a region, then that uncertainty and conflict creates, you know, negativity, right? It slows down Absolutely. The progress of adoption.
Creates negativity, it creates uncertainty. And that's why it's important that all of our viewers actually understand sort of the regional dynamics. If you're in Europe, it's definitely worth not just keeping up with what's happening in your own country, but also the countries around you. You are part of a unified framework, and whether you like it or not, those MiCA rules probably apply to you if you live in Europe. So it's necessary to keep an eye on what other countries are doing. Because don't forget, guys, Most will miss it, most will mock it, and most will wait until it's too late. But the 1%, there with conviction.
Be a 1%er.
Thanks, guys.
Folks. Bye.